Hi, I'm Clifford Bennett from Herston Economics, and the markets this week are ending on the sort of note we expected at long last. Looking very good indeed. Great move in the US equity markets overnight. It really was building on what was already happening in Asia yesterday. I know everyone's talking about the payrolls data, but really we're all expecting better numbers there anyway. I think really it was a momentum build that started in Asia yesterday, as everyone realized the situation in Libya is not going to slow Asia or Latin America. Therefore, it's important from a human and geopolitical point of view, but from a market's point of view, it really isn't that important, even in the oil market. So oil is going to continue to move higher as we thought. We're seeing some selling in gold at the moment. That's on the basis of, this realization that everything is actually quite good with the world. So a lot of people who like to buy gold on fear-based motivations, they're now selling out. It's a dip to buy. We might just see how far that dip goes, but I think it's a dip to buy. Another piece of big news overnight was Trichet hinting that he could raise rates at the next ECB meeting, leaving rates unchanged yesterday. He may not. He's got to talk hard just to take the edge off any union expectations for wage rises that might be building out there in the community as a whole throughout Europe. He mentioned about secondary inflationary impact from higher oil prices, higher food prices. That's what he's really on about, just toning down any wage claims that might be in the pipeline. So he may or may not raise rates, but even if he does, let's think about this. ECB, the rates are at 1%, so we're talking about going to 1.25, maybe 1.5 by the end of the year. But we're already, even with that sort of talk on the table, you're already having people saying, no, the European economy needs more nurturing than that. If only our own central bank here in Australia, the Reserve Bank, had been listening to that, as they've raised rates to 4.75%. In Europe, they're nervous about a move from 1 to 1.25, and I would suggest to you that the state of the domestic sector in Australia is very similar to the state of the economy in Europe. In fact, the European economy is probably doing better than our domestic sector. Back to markets though, we suggested the low was seen a couple of days ago, and it was. You're going to see good follow through today. I mentioned yesterday how cheap mining stocks are. They still are. They've got to double in price basically, and I include the majors in that, the BHPs, the Fortescues. So we're looking for very bullish markets. I think this is takeoff time. This is that capitulation of all the bears, all of that fear mongering. It's pretty much used every card in the pack now. So we're going to see no reason to sell going forward, and the bulls are going to have to basically race each other to get hold of decent amounts of stock. So very bullish indeed. We saw the euro higher overnight. Euro's going 149, 156 this year, probably 165 next. The Australian dollar, it's had a bit of a pause, but I think it will be its turn. If not later today, then into next week. Still very bullish, 103, 105, 108, 112 in 2012 for the Aussie. ASX market, 5,600 by year end is probably too low. Very bullish markets throughout Asia today. Expect significant uptrends to really get underway. Have a great day and a good weekend.